Hello everyone, welcome to the live stream. I'm James and we're a few minutes early. We'll start shortly, but welcome to everyone who's in here. Please put up your questions if you've got any, and I'll be pleased to answer them as we go along. And also, if you can hear me well, if you could just give me an indication in the screen, in the chat box. Just let me know that you can hear me okay, and we'll just wait for the others to come in. Hope you all had a fantastic weekend, and good day, Sona. Nice to see you. Hope you all had a great weekend, folks. I was away over the weekend. I went down to Plettenberg Bay for the start of the Bitcoin Classic Wedge Classic Surf competition, and did some Bitcoin business down there too. Hello, R. Good day, Lucas. Goeiemiddag, Lucas. Baie goed om jou hier te sien. Dis Afrikaans. You probably understand it. Good day, David. Nice to see you, mate. Good day, NK. Good morning to you. And Rohan, Joel. I'm very well, thank you. Thoughts on natural gas, of course. We'll look at that shortly. Good day, Martin. Nice to see you too. Martin Lawson. And Assad Javed. Hi, what's your take on natural gas? Good buying opportunity. We're going to look at natural gas as we go along. Good day, NK. Fantastic. Thanks for confirming that the audio is working and the video is good. I prepared a little sort of daily report here, which I'm going to put up in all my live streams, and we'll go through it shortly. It's just a little summary of today, which I've gleaned from Grok by scanning and skimming all the various articles of the day and summarizing them into one article, just to have a look at what's going on in the market, in economics, in politics, and whatever's going on, just to set the scene, as it says at the top there, for the 7th of July. That is today. Good day. Lucas did understand the Afrikaans. Fantastic. Ja, Afrikaans en Nederlands is baie, my Afrikaans isn't very good. Baie saam, very close, very together. Similar is the word I'm looking for. Yeah, we're going to look at natural gas. We'll start with natural gas today, guys. We'll talk about AMD. Good day, Barbara. Nice to see you too. And Somnath, good evening. Have a good week ahead. Thank you very much. I appreciate that. Thank you so much. And to you too. We start in 3 minutes, folks. So grab your coffee, go and get a juice. I've got my Coke Zero ready for the live stream. 39 folks in here, and we haven't even started yet. So thank you for all attending. I really appreciate it. And I think I'm going to lean more and more towards live streams as we go forward into the future, because I'm also going to be doing a morning show, which I'll tell you more about as we go along, for a different company, and doing the morning market wrap roundup. So, but I'll probably do most of my work on live streams as well, because there are a couple of advantages of doing live streams in that you can ask me questions. I can kind of gauge where the points of uncertainty are and address them, rather than sort of relying on the comments section in the videos below. So in these live sessions, I can kind of gauge where people are struggling a little bit, where they need to know a bit more info, and I can address those. So thank you, Somnath. I'm going to have a busy week, and I hope you all are too. I'm going to quickly switch across to the charts while we're talking and get rid of the current screen, and just keep an eye on for the next couple of minutes before we start. So let's see how we can go. There we go, charts. Now, the first thing people were asking about was natural gas. We're currently trading at $3.30. We're long from $3.37. So I'm 7 cents out of the money on this trade, but it is bouncing and forming a bullish engulfing candle. And we saw the same sort of thing last time we reached this area, the bullish engulfing candle right there, where my cursor is. But interestingly, on the continuous price here at Pepperstone, we've not broken down below support, whereas on the futures we have, both trying to bounce back sharply. Notice that the 20-period moving average is above us on both charts. This is the natural gas continuous price at Pepperstone in the center, and this is the natural gas futures given by the Henry Hub, and provided to me by Black Bull. So both of these are bouncing, both the futures and the continuous. And the continuous is made up of the front month, the next month, the spot price, and a couple of other things. So it's a different price. As you can see, that's trading at 324. The futures at 331 almost right now. But we'll start in 1 minute, and I'll talk about natural gas to kick this session off, because I am aware that most people are busy with their natural gas trades, and it's Monday. Weekend rollovers occurred, and we need to set up for this week. Good day to you, Emily Trading. Nice to see you too. And Joydeep, nice to see you as well. Good afternoon. I guess you're in India because it's afternoon. It's actually afternoon here. It's 2 o'clock and we're about to start. It's 8 o'clock in New York. Sorry, 7 o'clock. No, it's 8 o'clock in New York. Correct. So, well, good morning to everyone in New York and across the US. Those in California still be asleep, I guess. Pretty early, maybe 3, 4 o'clock in the morning. All right, folks, it's 2 o'clock my time, 8 o'clock New York. Let's start and get into the markets. And the first thing that I want to look at is natural gas. We talked about this a little bit briefly a few minutes ago. I want to point out one thing, actually a couple of things that are important. We're basically long on natural gas. If you remember, I took a very small long position at the close of play on Friday at this candle here at the support level, the bottom of the channel, and just above this sort of order block horizontal support channel line where we sort of eventually broke down through. But we did try to buy at the bottom of the channel. It did not, well, it bounced basically. We got a one up, one down reversal pattern, actually a couple in a row, following a number of full stop candles. A very good opportunity to buy natural gas right there. And obviously at the bottom of the channel and pretty close to the bottom of this order block. But as it happened, over the weekend, we rolled over and we rolled down, gap down over the weekend. Not by much, just about 8 cents. But we are down. And now on the futures, we're below the support level, which is a bit concerning. We're retesting it from underside now. And I'm trading the futures, not the continuous price. So we are retesting from underside. But that is a resistance level that we're busy just retesting. It's a little bit more optimistic on the continuous price, though. And that's why I want to point this out to you, because these prices are different, and the continuous price is what I would regard as not a real price. But a lot of people trade these ETFs. And you can see on the ETF, on this continuous ETF at Pepperstone, we dropped right back down to support. We didn't break support. We broke it on the futures. There's the futures chart. So we got down below support. We're busy retesting from underneath. Whereas on the continuous, we broke down through the trend line to support, not below support. That's the support level. But we broke down through the trend line with that rollover over the weekend, with that gap down. Notice on both charts, the 20-period moving average, the green line is the one above us. And on this continuous price, we've also got the trend line above us. On this chart, we've broken down through the trend line, and we're retesting the trend line from the underside. So it's also a resistance level. But we have found support at that potential double bottom. So what's going to happen next? I don't know. I'm worried about the futures breaking down below support. This is a retest. It's not a bullish candle just yet. And we've got some time before this candle rolls over. In fact, we've got 2 more hours to wait before making a decision on natural gas. I only take decisions every 4 hours. If you want to swing trade natural gas, don't look at the 5-minute charts and the 3-minute charts and the 15 and the 1 hour charts. Look at the 4 hour charts and the day charts and make it more relaxed. It's a very, very volatile instrument to trade, and we get massive swings and a lot of traps inside the 4 hour candles. If you're trading 5-minute, 15-minute, 1 hour charts, you'll find that you'll get a lot of whipsaw within the 4 hour candle. But by the end of the 4 hour candle period, by the time that's rolled over, that 4 hour block, you'll find that the price has normally settled on which way it wants to go. So it's the best time frame for trading natural gas, unless you're day trading and scalping, which is not what we're doing. So that's where we are. We're long. I'm looking to add a new position to the long side. My general idea on natural gas is that as long as we're holding roughly $3, the next target should be $4 and above. But I'm not counting on that. If you look at the futures chart on the longer term basis, and I've pointed this out multiple times, it doesn't look quite as bad anymore, but it's a kind of a head and shoulders pattern, really. That's what I'm trying to point out to you. There's the left-hand shoulder. I could draw it in for you, but I don't really want to waste everyone's time, and it's not the best sort of head and shoulders pattern. I probably can't even find the tool over here, head and shoulders, there it is. So something like this. Let me just quickly draw it in, and I'm just going to delete it straight away. But if you sort of have a jaundiced eye, you might consider that to be a valid head and shoulders pattern. I don't like head and shoulders because they never work out unless, or they're never confirmed until we break down through that neckline, and that takes some time. And by the time we've got down there, unless you're selling right at the top of the right-hand shoulder for some other reason, by the time we've broken down through there, it's pretty much too late. Half the move's over. So I don't really like them. And most of the time, more than 50%, I would say, they turn out not to be head and shoulders in the end. So yeah, is it a head and shoulders? Potentially. If it is, we're going down below $3 and we'd be closer to $2. If it's not a head and shoulders and we don't, we move sideways across this page, roughly ranging between $3 and $4 for the next month, until the end of this contract, let's say, then it's very possible that this is not going to be a head and shoulders and that we'll find some support and just trade between $3 and $4, maybe even $5 over the next number of months. So that's where we are. Of course, we've got to consider seasonality and the COT report, and that's my task today. But just having a brief glimpse at matters, it seems to be okay. What I want to do before we carry on, folks, so that's where we are on natural gas. I want to go to this page very quickly and just show you something. And I do realize I've got to get rid of this as soon as possible because this slows down my computer tremendously, and I don't like that. So what I'm going to go through, this is a daily morning brief. I'm going to be doing this every day for my private group. So if you're not part of my private group, I won't do it in every live stream video, but I'll go through the landscape, put it that way, setting the scene for today's trading. I'm going to go through it with you very briefly today, but there's not a lot of time. And it's best read through, really. So those in my private group will get this report every single day, first thing in the morning, before the New York session begins. So if you'd like to get hold of that, join the private group. There's a link below. We've had we actually doubled our private group membership over the last month. So I really appreciate those of you who are in the private group. And I'd encourage you, some of you, and there's a discount running, a 33% discount. There's a link below. So take advantage of it. It's not expensive, and you'll learn how to trade if you're struggling to improve your trading. So I want to go through this. I'm not going to read the whole thing, but let's quickly have a look at it. Economic landscape. I'm going to pull out certain points, so just bear with me. We had the jobs report, 147,000 jobs, so better than expected. But the private payrolls dropped. Remember, I pointed this out when we looked at this live. So what's the Fed going to do? Are they worried about jobs or not? That's basically the story here. It's jobs versus inflation. Which one's going to be foremost in the Fed's mind? And Jerome Powell, if he still has a job, will have to make these decisions before the next meeting. And I suspect, even though there's only a 30% chance of any rate cuts, I actually think that there probably will be a rate cut one way or another, whether it's going to be bullied through by various politicians or whether it's going to be a free and willing decision, I don't know. But it's possible, I think more like probable, that we'll get a rate cut. So we've got jobs versus inflation. That's all I'm going to talk about that. Political developments, well, we've had Elon Musk starting his own political party, and Tesla shares dropped close to 10% last night. But the Bitcoiners think this is a good thing. I don't know. I don't think any risk, any geopolitical tension, any political tension, even within a country, is good for any market, including Bitcoin, unless it's war. And war is always good for business. We're not talking about war here. We're talking about Elon Musk going off on a rant. Stock markets, S&P, new all-time high, driven by tech and chip stocks yet again, but high valuations and economic uncertainty suggest a range-bound outlook for 2025, and this is kind of what I've been saying. Now, these are all taken from comments and analysts on Twitter. I've tried to sort of weed out the bad ones and get some of the good stuff in here, and I've asked Twitter, I gave it very specific instructions, X, to give me a summary by going through and skimming. I think the word is skimming. There's a better word for it. Getting the news out of X, which is real-time and direct. It's much better than ChatGPT. So if you want something that's happened in the last 5 minutes, I think Grok is much better. And so for this sort of report, it's fantastic. And you can do this sort of thing yourself, but make sure you give it the correct instructions. Otherwise, junk in, junk out. So range-bound market. Now, we're trading at pretty close to all-time highs. We're going to have a look at those markets in a minute. Are we going to go up? We're long on a couple of the markets, so long on some of the names. So I'm still bullish until otherwise proven. I was very bearish after that big sell-off, but I've now switched direction. Crypto, as I said, buzzing with optimism because Elon might start a political party. That's nonsense, obviously. Institutional adoption increasing, and Bitcoin holding up at around its 108 level, 109,000, 108.5 right now. My view on Bitcoin and crypto in general is that we're going up towards 150 or 160 on Bitcoin. The altcoins will follow if Bitcoin gets a wiggle on being the sort of master coin. So yeah, bullish, we're still long. I've not changed my positions and holding my long positions. I'll show you the charts shortly. Energy markets, well, we know that's been up and down. Not much to say there because of what's going on in the Middle East and Russia. Metals, are we going to see this rush to gold? And are central banks going to shift their monetary policy back to pre the gold standard being removed? There's all sorts of talk, and again, it's not tradable, but there's just an underlying idea that gold and silver and maybe even copper will continue to escalate and grow in strength, and potentially dramatically if the central banks are heading that way. I don't know. I mean, there's a lot of noise about it. Now, stocks and grains, we'll have a look at that in a minute. Pretty much static, really. We saw a bit of a rally on sugar, nice rally on sugar. Corn's come off a bit, wheat's come off a bit, soya's come off a bit. So the actual grains aren't doing so well today. We'll have a look as well. And then basically an overall summary. Volatility is the name of the game in stocks. Focus on energy and defense for outperformance. Obviously, when there's war, energy and defense always outperform. Whilst tech may lag, and crypto traders should watch the 101,280 level. I don't know why. I didn't write that. Just ignore that, I think. And then energy markets hinge on geopolitical headlines, etc., etc. So let's go and have a look at the charts with all that having said, and I'm going to get out of my Safari browser because let's just hide that and back to the charts. Okay, so folks, we've talked about natural gas, and I'm looking to get long. This candle's shaping up quite nicely now. Please just let me know if you can hear me, everyone. Hello, Jazz. Hello, Martin, Gabriel, Nikhil Prasad. From Ola Prime, I think, Nikhil. Nice to see you too. Folks, basically on natural gas, I'm looking to get long on this again. I'm wondering if I'm going to wait for a close above the 20-period moving average. I'm not trading the continuous, I'm trading the futures. And I'm wondering if I should look for a close above the 20-period moving average. But we've got a couple of other technical indicators here. First of all, this double bottom that we've now trying to get back inside. So we've now actually overcome that double bottom and broke higher, which is a good start. We've got the trend line, this red trend line, the downward trend line, and the 20-period moving average all in confluence at the same place, which means that if we break and hold above that level there, straight above us, right directly above where we are at the moment, that should be a very bullish sign and positive sign for natural gas. So watch that level there. I'll give you a number even, 338. And actually, that's the price that we got into this trade in the first place. So we'll just be adding a little bit more. I've only got about a 20% position on there. I'll be adding some more to that to build it up to about 40%, but only if we get above there and close above there on a 4-hour candle basis. And I won't be taking any trades until the next 4-hour rollover in a couple of hours' time. So that's all of that on natural gas. And then uranium, you know my positions on uranium, nothing on URA, waiting for a pullback down into the support block in order to get long again. We got long right down at the bottom here, around $22. Just for those who haven't been caught up with what we've been doing over the last couple of months on uranium, we got long right at the bottom. That's been a long trade. That was in March. We took some profit, 25% here at $33. We took another 25% at 35.5, and we took the remaining balance of 50% right at the top. And I'm looking for a pullback down into one of these green or yellow areas. This one down here at around about 33. But more interestingly, down towards this level here where the 200, the 50, the 100 period moving average, the 618 fib, the golden pocket, and all that support down there. If we could, and it'll be like a stink bid really, if we could get a dip down to 28 or 29 on URA, that'll be an excellent trade. So we're waiting for that dip. But in the meantime, I'm still long on UEC. And UEC is actually holding up really well in comparison. So we're long from two positions on UEC down here at $4.69, and also one from $6.40, and we're currently trading at $6.55. We've got an ascending and rising triangle pattern here on UEC. This is another uranium product. I trade two uranium products, URA and UEC. This one's looking okay. We're holding the 200. Let me zoom in. There's the 200 period moving average, the purple line. We're holding that. We're below the 20, so in the very short term, we're slightly bearish. But look, we've got the 50 and the 100 below us and all the support and this ascending triangle, which should break out to the top. About a 65 to 70% of the time, an ascending triangle will break out to the top and a descending triangle will break out to the bottom. So we're trading in this ascending triangle right at the bottom on the 200 period moving average. And I instructed and informed my private group when at that level, that's the level from which we're long. But I also pointed this out in the last live stream. Some of you may have taken that chance. So a couple of days ago, Friday, was it Thursday or Friday? I pointed out that this is a great area to be buying UEC. If you want to get into uranium, but don't buy URA just yet, because we've got to pull back on that one a little bit. And that could actually drag UEC down. But these are two disparate charts. UEC looks like it's bullish. URA looks like it needs to pull back. So we're just long on UEC. WTI, we remain long on this one too. Short. Then we give you a heart attack there. So WTI, we have short positions, only one really from there. If you remember, we got short at the top here on that big spike up after Operation, whatever it was called, Dagger Shield or whatever in Iran. And that's what happened to oil, spiking up just to the top of the channel and into that order block where I was waiting and looking for days and days and even weeks on end, waiting for that to happen. This is what preparation is all about and foresight, folks. If you see a setup that hasn't occurred, that could potentially occur in the future, that would provide an excellent trading opportunity for you, draw it in. You'll see on my charts, I draw in blobs, I draw in lines, I draw in potential paths. In fact, I've even got one. No, I don't have one. Yeah, there's a potential path that I've got drawn in on here already. This one's not quite accurate. I will readjust this path. But I'm trying to envisage where the price might go, and I can set a trap and wait for it right there, which is what we did on WTI. So we got short right at the top there. It was a fantastic trade. And we're right down, back at the order block, back at Moab. We're trying to get back inside Moab. We took profit down there, and we resold at the top of Moab. So there's the 200 period moving average. There's Moab. It's the mother of all breaks. It's the big key level that oil broke down through and has set the scene for a lower oil price overall going into the future. So we're now looking at a lower range on the price of oil. And I would postulate and estimate that that price is now roughly somewhere between $70 and $60, potentially more to the lower side. So I'm constantly looking to sell WTI oil, as we have been doing for 3 years now. Every time we've reached the top of this channel, or the 200 period moving average, or somewhere up into an order block, we've managed to get short. This one was a little bit lucky because it happened at about 1 o'clock in the morning whilst I was asleep. But I had my alerts set, and this is a part of the sort of what I'm trying to tell you about preparation. Set your alerts, set your levels, draw projected paths on your charts, try and picture and envisage how this market might play out in the future, and set your traps. Those traps are areas where you might put a bid or you might put an offer where the market is nowhere near that price. It might get there sometime in the future, but you don't know. And until it does, and until we've passed that time, you don't know. I set a trap there. I had an alert. I woke up, I sold, and I took profit right down at the bottom here. So we got in our last tranche. We had one slightly lower down. We got in at $75, and we got out at exactly $64.20. I think, I don't want to exaggerate, but I think it was around $64.20, maybe slightly below 64. So we got a $10, $11 profit on that trade just by being a little bit vigilant, rinse and repeat, back to the top of the channel, into the order block, another sell. So I'm still short on WTI oil, and I've sold there at the top of the order block, near the 200 period moving average, and I'm allowing for this price to bounce somewhere between where we are currently trading at 66 and maybe even a peak back up to the channel top, rinse and repeat what we did before and we've done every other time. If we get back to the channel top, I'll be looking to sell again. That could take us all the way back up to $72.50 if that took place over the next couple of days. So be aware of that. It doesn't mean that we're going up. It just means that we're trading within the same channel that we've been trading within for the last, I don't know, it's probably over 3 years now. So we have a small position on this one too, and I'll be looking to add up into those levels as I've just described to you First of all, at the 200 period moving average at about $68.20. I've got an order set for that already. So if the price pops up to the 200 period moving average, I'll add another short tranche there. If we pop up into these higher levels and then start to form a reversal, I won't enter the trade immediately if we start rallying up dramatically beyond there. If we get up above the 200, we're no longer as bearish as we were, but we're still trading within this big bear channel. So yeah, I'll be looking to add slightly higher above that as well, but only on a clear reversal. Having broken above the 200 period moving average would put me slightly more cautious, make me more cautious about that trade. But for now, my next order is at 68.20 for an additional short, and we'll see how we go. If we even get that high, I'm not even sure we will. Let's go to currencies, folks. This is the euro, the pound, and the pound yen along the top row here. We've been trading mostly the crosses over the last week, the previous week, but the week before that, we got long on the euro and the pound, and we took about 250 pips on each one of these, got in at the pullback to the 20 period moving average, got in at the pullback to the 50 period moving average. Very, very simple. My prognosis for both of these was up, as it is for all the majors against the US dollar. I believe the US dollar is going to be falling continuously until we get down to about 93 or 90. We're currently trading at 97, so there's a long way to go down still. We're busy with a bit of a pullback right now, which is normal because we've sold off quite sharply. Now let's have a look at where we could pull back to. Very similar to the oil WTI chart, I've got a similar Moab zone on my dollar index chart. Here it is, Dixie Moab. And basically, we've broken down through a very, very key level on the dollar. We tried to break out through the top. I'm going to switch to the weekly chart. We've got a couple of things going on here. First of all, we tried to break out through the top of this range and failed. That's a fake out breakout. We've now done the next, if the long is wrong, then the short should be caught, something like that. There's a saying. But the long was wrong, and as soon as that broke down there and failed to get up beyond this expanding pattern, megaphone, trumpet, saxophone top, as soon as we failed there and started to move down, it was very, very clear and obvious to me, even though we didn't get to the top 200 Bollinger Band, the skinny red line on the top, even though we didn't get there, we did get to the top of the megaphone, rejected pretty sharply. This is a weekly chart, and we're now moving down. But we've moved down a little bit too quickly. I'm pointing out to you the Dixie Moab level on the chart here. I believe that that's now the level below which the dollar will probably hold for a while. And the next target for the dollar is down here where my question mark is, this order block and the bottom of the megaphone pattern. And I do believe we're obviously going to get there. I think it's pretty clear. But we may have to bounce up a little bit first, and maybe even all the way back up to Dixie Moab, which would take us up to 100, the parity level on the dollar index. So if we get back to 100, it's a big round number. It's the parity number. It's the Dixie Moab. And it'll also be where the 20-week moving average is, this line coming down here. So I'm expecting the dollar to bounce back up to 100. Let's switch to the day chart. Let's have a look at the patterns. And you can see we're just curling up on the day chart. There's the lower 200 period Bollinger Band, this thin green line below us. We're curling up off that Bollinger Band bounce. Of course, that's why we're no longer long on the euro and the pound, because we got to the lower Bollinger Band. We have to bounce, we have to recover. There's the 20 period moving average, there's the 50. But I think we'll get up to Dixie Moab, and that will take us back up to 100. So we're trading at 97.30 now, 250, 300 pips to the upside for the dollar, and then back down again. That means 200, let's call it 200 pips, to the downside for the euro and the pound, and that could take us all the way down. We're trading at 17.25 now. We could then see the euro move down back to this, probably a very sensible area actually, back to the swing high, double top swing high that we broke out of. So it's a very, very key and important level. It's also where the 20 period moving average is. So I expect we could drop 200 pips on the euro from 17.20 right now down to 15.20. Actually, we'd be below that top, really. We'd be in at the area that we originally got long at. So let's watch it. We could bounce off the 20 period moving average and carry on moving up, and maybe that's what's going to happen, and this momentum could keep going. But we do need a little bit of a pullback, and we're not long on the euro or the pound anymore. Same sort of thing on the pound. Look for that 200 pip pullback, and we're currently trading at 136.20. So it'd be 134.20. And once again, back down to the swing low originally where we got into the long position. So a pullback down to that horizontal purple line, and then a bounce off there for the pound. Those are my ideas. If we don't get that, we don't get it, and then we don't take the trade. I'm also short on the pound yen and the euro yen. The euro yen is hedged by and large. Most of it is hedged. And I'm looking to add another short up here at the 78.6% Fibonacci level. I'm going to turn this to a weekly chart. Actually, no, it's all right like this. So there's the 786 fib. I'm simply going to add another short position. It's not a massive position now because this whole lot down at the bottom here is completely hedged. And I have one very small position here at the 618 fib. So, and don't be dismayed and alarmed by the fact that we've moved up from 167 since we got short up to 170. Remember, this is the dollar, this is the euro yen. So a pip is not the same as a pip on the pound or the Aussie or the euro pound or, you know, some of the very expensive pip counts. So pips are cheap on the euro yen and the pound yen. We're also short on the pound yen. And I said as well on Friday, maybe we've just got to tip that top 200 period Bollinger Band and possibly even also the 78.6% fib or this red order block. So I'll be watching this one very closely too. This is a small position. We only have about a 15% position on this short as well. And the reason I shorted this, top of the order block, top of the channel, reversal, bearish engulfing candle, and it didn't hold the dip. Bounced off the 200 period moving average and moved up a little bit. So yeah, we're short on that one as well. These are not huge positions, and most of it on the euro yen is already hedged. We have a tiny one on the pound yen. I want to go across and have a look at stocks, folks. We're now long on the NASDAQ, but we did take, I hedged it at the top. If you were in my live stream on Friday, you will have known about this. So basically the channel center line, I pointed this out. I said, that's what I'm going to do, and I've done it. In my blob, channel center line, near the 200 period, top 200 period Bollinger Band, not quite there yet, but at the channel center line. And so after getting along over here, we got out of our, not out, we hedged it. So I've still got that long trade on, but I've got a short trade higher up, offsetting the long position. So I've locked in profit on that trade. That's what we got on the NASDAQ. And the S&P, I'm fully hedged, and I may as well be out of the game on this altogether. It's bullish. I should be long. I'm not long. I regret that, but it's okay. I'm long on some of the other names, and I'm long on the NASDAQ now, and I'm long on crypto. I think I've got enough longs for now, but not on the S&P, unfortunately. So we have two short positions, which I immediately hedged the moment we moved higher. So I've locked in like a $10 loss on this, not even, maybe $7. So call it just about no trade on here, break even, if you will. And we're moving up. I wish I was long, but I'll try and buy some pullbacks, perhaps down to 6,140, the original double top breakout level. We've broken up above that level so far. We have not retested it from with a pullback. Notice that if we get a pullback on the S&P, it'll take us down to this green line, the original double top all-time high, and also the 20-period moving average, which is creeping up underneath us, will probably meet us at about the same sort of price. So yeah, I'll try and get long on the S&P if we dip down to that level at 6140. I'm already long on the NASDAQ, but hedged at the top. I'll remove that hedge if we break higher and keep the long position on. So no stress there. I'll take the hedge off at break even. And then we've got nothing on the German 30. After having taken profit on our longs and our shorts, we traded this one fantastically. Those of you who've been following will know this. We got short at the top, exited, took profit, got long at the 50-period moving average, exited, took profit at the 20. We're now flat. I'm looking for this sort of move on the German 30. I think we could get a move up to the top of the channel once again. This channel has been undefeated since it began, all the way back in 2022. Isn't that fascinating? You don't often see this sort of neatness on charts, and it worries me a bit. But we are at the top of the channel, and we have not broken out of this channel yet. And on every occasion we've got to the top, we've rejected. So I think at least we'll get a very short term, if not a longer, sort of more medium aggressive projection from here at the channel top. If we moved up, I've got to drag this along now because we've moved sideways without moving up. But so let's just pull that slightly to the right. So if we moved up the channel top now and followed this path roughly on the German 30, we'd get up to just around $25,000. And I think 25,000 will be too tempting to not try it or test it, and probably even pierce above it. And so we could get a little bit of a poke up through the channel. If I can move this, probably not. Maybe a little bit of a poke up through the channel top. Can I get it up there? Something like that. and then a move down, back down to the channel center line, the dotted line in the middle, and the 100 and the 200 period moving averages hovering in the same sort of zone. So I want to short the German 30, but I want to buy the S&P, and I'm already long on the NASDAQ, but with the profits hedged and locked in. So a little bit of a complicated story, and unless you're following me trade by trade, and it's not complicated, but it might seem like that when you're looking at it like this. So if you want to follow me trade by trade, every detail precisely to the penny, when I get in, get out, hedge, whatever I do, come and join us in the private group. It becomes far less difficult and less complicated. Okay, now let's look at metals and crypto. I'm going to start with Bitcoin. I'm going to ignore Ethereum and XRP. Whatever Bitcoin does, I'm going to go with the same on Ethereum and XRP. My long positions on Bitcoin start in the low 70s, and I've got a whole bunch in around about 100,000. So a whole bunch down there and a whole bunch up here. And we're currently trading above this channel line, bull flag, that we broke out of. A couple of things worry me about this. One, not that much, but a little bit. The fact that this bull flag is a little bit too neat. We've now broken out through the top, which is good, I suppose. But it's not the channel's so neat that it doesn't take very much to destroy and disrupt the pattern. And so when we do disrupt the pattern like we've just done, it's kind of slightly less formidable. It's just too neat. We need a little bit of mess and chop around the sides, and maybe that's what this is, and it'll just come back in. I don't know. But look below us. This is the day chart on Bitcoin. The green line is the 20-period moving average. The red line is the 50-period moving average. We've got a higher high and a lower low now after. That's why I've drawn these red squiggles in. So for the first time in quite a while, we've now got a nascent bull trend, and we've moved up beyond those highs, but we've not broken that high. We've not broken that high. That's the next step. We've tried. We almost got through there and rejected, and we're trading sideways above the channel bull flag top, but sideways. So my plan, and I think I'd like to hold above this 20 and 50 period confluence, period moving average confluence, and the swing low. So somewhere around about 106 is my first part of concern. Probably this swing low here, and the low of that is about 105, exactly 105 really. So I don't want us to close below 105 at all. This is a day chart, and I'd like us to hold above 107.20, 107.200 rather. So I'll be watching this very closely today. I'm not hedged. I don't have any. It's an open long position at this point, but I will hedge this on a moment's notice if we start to see significant weakness. So Ethereum, let me just open up these charts for you quickly. We're long on Ethereum, position from there. Basically, that's it. And then on XRP, we've got a couple of positions on here. Some from lower down, closer to $1.70. Got one at around $2, I think it was, 119. 192, and we're currently trading at 228. So we've got some decent profit on this. We actually took a lot of profit on this move up. We luckily got long in the very, I think I got long at $1, just below $1. So I managed to get $1 out of that move, double that trade. And then we got long there, we got long there, got long there, and got long there. And really the longest bull flag I've ever seen in my life. But we are trading near the top. We haven't got below the channel center line, the dotted line in the middle, and we're trading near the top of the channel. And if we don't get down below that channel center line, it's a very bullish sign. And hugging the top of the channel, bullish breakout more likely. Hugging the bottom of the channel, bearish breakout more likely. What we want to see with channels really, if we're not looking for a breakout, if you're range trading it, you want to see sharp rejections from the top and then surging down to the bottom and then back up to the top. This sort of sideways, hugging the top stuff looks pretty bullish to me. So that's XRP, XRP, Coinbase is the broker. I'm not using Coinbase. That's XRP, Bitcoin, and Ethereum. And then going across to gold, so I've now just got long on gold after being short since we got high up to about $3,500, just on it, I think. Did we actually precisely touch that? 501 maybe. But anyway, we've been short since the top there. We've taken profit on quite a number of occasions, and we're now long. So we took, finally, on, I think it was Thursday or Friday, we got out of our final short position, right down here at the trend line, obvious place, rising trend line, get out. And then we broke up through the short-term falling trend line and above the 50-period moving average, and I got long, and we're now long. This is a small position, and I do think, however, this is looking a bit weak. As long as we hold this apex, we'll be fine. But if we break down through this conglomeration apex and the golden pocket and these various Fibonacci levels, order blocks, etc., we should see probably a fairly quick and sudden dip. We'd be going sideways, Bollinger Bands have contracted and squeezed in, volatility has dropped off, and so we're going to see a Bollinger Band expansion and explosion, probably to the downside by the looks of it. Could take us down to 3,120, and that's where I'll be adding my next long tranche. Below that, on a daily close below 31.20, I'll be hedging the entire lot for a move down to $3,000 and maybe even 2,800. So that's my plan on gold. I'm going to add some more at 31.20 if we get a chance. I have a very small position here. I'd like to add some more on and then look for that bounce. If that fails and we close below that level on a daily basis, I'm going to hedge the entire lot, looking for a move down to the 200-period moving average. That's this line at the bottom here, the purple line where my cursor is, and this rising shallower trend line and the big $3,000 level. And at a push, we might even have to retest the original breakout level after the last bull run. And that's down in the 2,700s and 800s. So that's gold. Silver, we're also long on silver. We've been long on silver for a long time, taking profit various occasions. We have remaining still a long position from 31.50-ish and another position from 36.20-ish. And we're now trading at 36.20. Bit of a dip pullback yesterday, maybe a double top trying to form. Lots of spike lows beneath us, which shows that there's a lot of buying interest there. And I guess if you put up a volume profile on here, you'd see there's a lot of volume that took place on these buying instances, driving this price back up again. Looking a little bit flaccid again today, but let's see how we go. So I think gold and silver will go along the same route, but I think silver probably has a little bit more opportunity for more explosive and rapid gains, and so I'm going to remain long on both of them for now. If you remember, I've been short on gold but long on silver for about a month and a half now, and we've taken profit on both the short golds and the long silvers simultaneously, as the gold-silver ratio has now moved into silver's favor and continues to do so, and may well continue in the future. And then copper, we're also long on copper. This has also pulled back a bit. We did perform the highest monthly close ever on copper last month, and at the end of June. So it's pretty bullish. It's about as bullish as you get. It's the highest close that's ever achieved, and we're long from $4.70, and we're trading at $4.95. So yeah, I don't know. It's not dollars. Let's just, yeah. I'm thinking of sugar in cents per pound. And dollars per ounce and so on. But anyway, nevertheless, copper, I think is kind of bullish. We've got a big order block down below here, and we've got the 20-period moving average, we're still holding. So in the very short term, we're still bullish. And then the 50 and the 100 down here, more or less at where we got into this original trade. So big support here between around about 470, 480 and 490, call it. So in this zone, it's about a 5-cent region. And if that fails, we may have to retest the 200-period moving average and this other order block down below at about 450. But so far, it's looking okay. I don't want these metals to weaken much more today if they're going to move up. And so today should be a day, start of the week, start of the month. Let's get these metals moving up. We've been moving way too long sideways on gold, and traders are getting bored, including you and me, I'm assuming. We've talked about energies, natural gas moving up still. We'll be getting along on this probably today if we get the chance. If we don't get the chance today, that means it's probably going to have moved down, and we're probably looking at a target of $3 instead of $4. So we're going to see how that goes. Now, on this page, I've got the South African Rand losing strength at last. This chart here shows the dollar against the South African Rand, and it's moved down from roughly 20 rands to the South African 20 rands to the US dollar. We moved all the way down below 18. That's a 10% increase or strength increase in the South African Rand. There's absolutely zero, zilch political or economic reason for it, for the Rand to strengthen. In fact, completely the opposite. But the fact that the Rand has strengthened means that we have an opportunity to sell it again. So we've got a 10% upside on this trade. The Rand should get back up to 20. We're trading at 18. That's a 10% potential profit. The only reason I think that the Rand may have gained a little bit of strength is obviously because of precious metals, platinum group metals and gold and silver and uranium. All comes out of the ground here in South Africa. But not only that, but there was sort of maybe a spurt of political optimism when the South Africans were in Donald Trump's Oval Office, and at least some dialogue was started, I suppose. But that went nowhere, and nothing has changed, and South Africans and the Americans are still fighting. And so the Rand is now giving up the ghost, I think. And we're going to see this move all the way back up to 20. So I'm long on that one. VIX, VIX is doing what the VIX does. And I only buy the VIX at the bottom of the yellow block, or beige block. So I'll be looking for a move down to 11, 12, or 13 into this zone here. Every time it gets there, I buy the VIX. And when it gets up above the orange or beige, not orange, or beige block, every time it gets above there, or yellow, I take profit. So I buy at the bottom and take profit when we break up through the top. It's as simple as that. It happens about once or twice a year. And apart from that, I just completely ignore it. We're also long on TLT. And if you've been following this saga for many months now, we're about at break even still. And we've just been moving sideways. Every time we get a bit of a pop-up, I get some excitement about this. We do have a falling wedge here. So eventually, this looks like, technically at least, unless there's some major catastrophe or lack of intervention, or Elon and Jerome Powell and Donald Trump and the rest of them, Besson, all that, have a big fight and everything blows up and these things just go, just fall through the floor. I don't think that's going to happen. And so we're probably going to break out through the top, but it's taking its very, very merry time. And we've got to get through the 100-period moving average, the black line above us. We've got to get through one trend line, the 200-period moving average, another trend line. And all that will only take us back up to about 90, I think. Yeah, about 91. If we can do all of that, we'll only be at 90 or 91, which is not very impressive, really, is it? So let's see. If we do manage to get a massive short squeeze on TLT, and it is possible, and I think it's probably likely even, this could move up really fast and dramatically. And we've seen, not so much recently, but a couple of moves in the past where you see these big short squeezes like that, and perhaps that's the sort of thing that's coming up. I think more likely that's going to happen than not, but we'll see. Anyway, I'm at break even on that trade. I'm going to hold it for yet another week, I think, despite my misgivings. And that's it. So that's the VIX, the Rand, and TLT. And then quickly going across the softs and grains. Those of you who got long on sugar with me last week, well done. This has gone gangbusters right back into the channel, almost to that channel center line. We're back at break even. That's where we got long on this position. Got another one from over there, but a big short squeeze. That's exactly what I talked about in session on Friday. Watch out for a massive short squeeze on sugar. And on Friday on sugar, let me just go back to that chart. Sugar was only trading down here, if you remember, at about 1550, and we squeezed all the way up during Friday up to 16, almost 1650. So massive short squeeze on sugar, big move up, and a good few percent, 5, 6, 7% on that. Wheat has collapsed back down. I'm just going to go through a couple of these just to highlight them to you. I'm very bullish on wheat, but we're getting into the apex of this triangle and into the golden pocket. There's one arrow that's leading into one corner, and you can see it as we... So basically, I'm going to draw a line straight down the middle there into that corner, and that's where we're headed on wheat. But we have broken out through the top of this massive falling wedge pattern. We broke out through the top for the first time since 2022. We've got a slightly bullish angle on this downward sloping falling wedge trend line. So I think that's been weakened. I think it's been defeated and broken. The next move for wheat should be up. We're just down into the 618 golden pocket right now. A little bit of a bounce today, trying to sort of push up there. But I think if we just move into that corner, the next move will be up out of that corner. I've lost my mouse cursor. Right, so that's wheat. And I don't think there's much else on here I want to talk about. Cotton, we're still long on cotton, faffing around. I do like cotton as well, actually. I kind of like all of these softs and grains, particularly some of these grains. Here's cotton, also breaking out, but moving sideways. A big reversal pattern here, double bottom, thrashing around within the falling channel line, eventually breaking out through the top, but not without a lot of pain, whipsaw, and stop outs back above and below, just really cleaning up the bottom there and cleaning up the mess, really. That's what this is called, taking out the trash. And once that's done, we can start moving up. So that's really what's happened, I think, on cotton. Coffee and cocoa, let's quickly talk about these. Nothing really to add. I have no positions on coffee, having taken profit at the bottom of the channel here on all of these shorts. We've been short for a long time. We had fairly large positions. We took them all out at the bottom here. Eventually, we took some tranches off before that as well. Partial profits in the orange arrow zones, and we got out of that. I'm looking for a bounce back up here. We haven't got a bounce. In fact, we've closed beneath the channel line. So both channels closed beneath the purple channel, and we've closed beneath the pink channel. So it's not looking very bullish, and it doesn't look like we're going to get a bounce anytime soon. But we do have a one up, one down candle pattern, and maybe the reversal will take place underneath both of these channels and then move up. My sort of target is back to the channel center line. We won't follow this path, obviously, because this path's done. But maybe something like this. Let's redraw it. Back to the channel center line. I'm going to have to raise this, something like that. And the top of the pink channel. So we've got a purple channel, center line, top of the pink channel, and an opportunity to sell coffee at around about $328. This is what I'm talking about when I'm saying envisage, visualize the path that the trade might take. And then it's kind of fun, really. It's like drawing patterns and pictures, and it's what we started learning as children, recognizing possibilities, opportunities, patterns. You know, it's all about pattern recognition. And you can see once I've drawn this on the chart that it kind of makes sense, right? And you could draw this yourself. So I'd be looking to sell coffee again now that we're out of this trade, back at around about 327, and we're currently trading at 288, 290. So yeah, and if it doesn't get back up there, then I won't sell. There's another channel center line, by the way. Let me just finish this one off very quickly. We talked about this channel center line, the purple channel, and the dotted blue line in the middle. There's another channel center line on the much steeper downward facing pink channel up here at this falling dotted line. And we may even reject there if we bounce up to that level. There's a swing high over here. And we could bounce up to like 310, 311, maybe 320, and then move down. So very good idea to sort of visualize what the market might do and then set your traps. As I said earlier, lay in wait and set those stink bids. A stink bid is, or a stink offer. A stink bid is where, let's say, coffee's trading at 288, which it is now, and you think that if it drops to, I don't know, 200 down here, like today, let's say it suddenly plunged down to 250 down here, and you thought that was an excellent support level, being a previous swing high and a swing low confluence together, flip-flop zone, and you think that if we get there, which is unlikely, we may never get there, we could get there next year, who knows, but you could set an order there called a stink bid. In other words, put an offer, a bid in at $250 and wait to see what happens. I might put a bid in, or rather an offer in here. I might, it's something I could do, I'm not saying I will, at 320, let's say, or 330 at the top, at that zone there, which I identified earlier. So try and visualize what you might do if the market gets there, or one way it moves up or moves down. Where could it move to? What are the patterns like? How does this market move? What's the nature or the personality, the character of this particular instrument? What has it done in the past? How does it move? And you can start to draw this. I know how coffee moves, for example, and I can see the sort of path I'm looking for. I'm not saying this path's accurate. I've got to redraw it at some point. But I'm looking for that to rally up for a bounce to sell back into. And then cocoa, a similar sort of thing. We're still short on cocoa, and I'm looking for this to move down, but I'll be looking to exit my shorts if we get back down to this order block and the channel bottom. So I've drawn a path in here to try and visualize what could happen next. And you can see I drew that path in about 2 weeks ago, and we've now sort of rolled past it, and it hasn't taken effect. But if I drew that line, sort of moved it along a bit to where we are now, it kind of makes more sense. And you can just move these lines and shift them if the market delays or has a pullback in time or doesn't quite get going. Sometimes markets are boring and lazy, and nothing goes on, like humans. I mean, markets are humans, and humans get boring and lazy, and markets get boring and lazy. So yeah, so try and visualize what might happen. I think this is what's going to happen. And so I'll set an exit order for this short trade down here at about 7,300. And I may even consider trying to buy the bounce back up to the channel center line, the dotted blue line. Always try and draw in your channels and then identify where the channel center line is. So bounce back up to there for a resell. So I've envisaged and visualized the path that I might take, and I can put my stink bids or offers in case the market, per chance, gets there. Then I'm there and I'm waiting. If a market doesn't get there, no foul, no harm done, nothing at all. It just didn't get the trade. You'll notice one, I'm going to just give you a good example of this actually, and I'm going to finish off with this. And this is this, I don't know if we talked about stocks. I think we did, yeah. So I must just say we're also long on MSTR and Tesla, looking to get long on ARK-K, NVIDIA, and QBTS. I want to show you exactly what I was talking about a few minutes ago. I drew this green line, this sort of arrow on QBTS. This is a stock. It's a quantum AI stock, and we've been trading this a little bit. I got long on the gap up there. One that was a Monday. We got out at the top. We sold at the top there actually, and got backed out. Got out back at the bottom. We have not been in a trade ever since. Notice that we've got a gap down below us here, which has not yet been filled. Although we did try. We dipped down to about halfway through the gap, but then didn't get to the bottom. I wanted us to get to the bottom, to the 50-period moving average, close the gap, and touch the top of the channel. And I've got I don't have an order in, but I've got a mental trigger or an order to rebuy at around about $12 to $13. We're currently trading at 16 something. So, but we didn't get there. Just didn't get there. We didn't even close the gap, which is annoying, incredibly annoying. And so we didn't get long. We may still get back down there, but on this occasion we have not done so. But if we had done, my mental order in this case, but it could have been a buy limit or something like that, my order would have been there in place waiting for the price to get there. Didn't get there, no trigger, no order, no trade, no harm done, nothing at all. And so if I could just give you a little bit of encouragement to try and do that on your charts today, that might be the message that you will find the most useful today. And I'd be interested as well if you want to show me your, excuse me, keep on bumping my mic. If you would like to email me or in my private group, show me your charts, show me your lines that you've got drawn in and what you envisage the next thing to happen. You'll find that by showing your charts to other people, you'll refine your strategy, you'll begin to notice where the flaws are, and you'll start to think about the markets much more proactively than you currently do. And so you'll be looking not what's happening now, but what might happen next week or next month or next year. For the longer term traders and investors, it could be 5 years. So I'd encourage you to do that. And that's all I've got to say about that. And I've been talking for almost an hour now, so it's about time I stop and have a look at some of the questions. So let's get on to that. So thank you for being here, everyone. I really appreciate it. And I love having you in my live streams, and I hope that you get benefit from this. And I'd love you to subscribe to the channel if you haven't done so already, and press the notification bell and give this video a thumbs up. But I'd love to see you in my private group as well. And there's a link below for that with a 33% discount. So I'd love to see you there. Right, I'm not sure I'm going to get through all of the questions, folks, because there are a large number. And I've really tried to answer and cover everything as efficiently as possible. But what I will do is I'll go through and I'll greet some of you. And I'm just going to read through some of your names. So good day, David Morel, NK, Assad, R, Barbara, Joydeep, Mark, Nikhil. Arcus, can you please explain stop loss in natural gas and also on 4-hour closing basis? Okay, I'm not sure what you mean there, Nikhil. The stop loss. So I hedge, Nikhil. I don't use stop losses. I hedge my trades. And that's a whole nother story for a different time. But it's something that you should learn, in my opinion. And my opinion is not always right. But it's something that you should learn in your trading, how to hedge. Hedging gives you so many advantages and benefits in your trading, not only technically, but psychologically too. And I've got a whole series of videos on hedging, and I cover it particularly in my swing trading blueprint course. So I would really suggest you just get the course. But there are some videos up on YouTube, which I've done on hedging. And if you go to my YouTube homepage, the channel page, ArcisFX whatever, it's just at ArcisFX, you can look up those videos. They're actually in the center of the screen on the home page. So I think there's a section below that says like technical training or something like that. And I think there are 2 or 3 videos on hedging in there, which you can go and look up and watch. Good day, Martin. Martin Wolfbauer, lovely to see you. Good morning, Jazz, Joydeep. Sean May, lovely to see you. Roby, welcome to the private group, Roby. Roby joined us yesterday or today, I'm not sure, I can't remember, but it's lovely to have you there, Roby. Good morning, James, you say. Just joined as you promised. You did promise. Thank you, I appreciate that. I think that was last week you promised, right? When you mention things you tell your private group, are you talking about in the Discord? Is that the right place? Yeah, it's not a Discord, Roby. It's where you are right now in the Slack group. We don't use Discord or Telegram because of scammers, and they break in all the time. It's impossible to stop them. So we use Slack, which is a little bit, I mean, it's expensive if you pay for it. And it's also a little bit clunky here and there. It's not quite as useful, as usable, but it's more secure. And I don't want people coming in there scamming my clients. People were coming in there asking my clients to send them money and invest with them and so on. People that had actually paid for membership only to try and scam my clients. So we've sort of clamped down on security dramatically. So yeah, Roby, it's in Slack, not Discord. All right. Good. I can't pronounce your name, but I think it's like Genqua. Thank you for being here. Hello to everyone. Happy trading. I'm trading gold. What is the next target? Can we reach 3263? Okay, so I've told you about gold. I think we've covered that in some detail, so I'm not going to go through that again. Natural gas is super bullish right now, says Jamie. Thank you, Jamie. Thanks for joining. Haven't seen you around before. It's great to have you. Crypto just joined the private group. Well done. Thank you, Crypto. Nice to see you there, mate. I'm not sure what your handle is there, but I'll see you back there in the inside. Lovely to have you. Our private group membership has exploded recently, guys. So, and it will be limited at some point. So if you want to join it, please do so now, because I don't think we'll have, I don't really want more than about 200 people, because it just becomes so hectic. So many questions, so much to talk about, so many interested people, so many people with trading issues and problems which they need to resolve. And it's very, very difficult for me to get round to it all. Especially if there's more, there's like 130 people or something right now. So once it gets above 200, I think it's almost impossible for one person, unless I employ someone else, which I don't want to do. So if you want to join the private group, I think you've got about a week or 2 or 3 at the most before it's full. So thanks, Crypto, you're in, well done. Jamie, NatGas moving. Yeah, we'll look at that shortly. Well, we did look at it. Let's quickly, I can't see it on my charts right now while we're busy doing this. Yeah, moving a little bit, but we're just at the 20 period moving average, folks, both on the continuous and on the futures. So don't get rushed into this. Look at what's above us on this chart, okay? I don't want you to get gangbusters long until we have defeated 1 trend line, 2 trend lines, the 20 period moving average, and closed above there on a 4-hour basis at the minimum. So we've still got some space to go, and we've got to get above. We've got to close on a 4-hour basis above $3. I'd say $3.40 really. And we're currently at $3.33. I think we've got to get about $3.40 to add some more. So we've got to get through all of that traffic up above us. Same on the continuous. This is no better or easier. And if you're trading this, a lot of folks trade the continuous prices at various brokers. This one happens to be Pepperstone. There's the 20 period moving average. We've broken up through the downward facing trend line, but the 20 and this big order block is still above us and will provide significant resistance in this candle and the next candle and so on. So be careful, don't get overexcited about that. Remember, we've also broken down below support on the futures here. And that support is now weaker than it was before that breakdown. Tesla, November, Tesla. Yeah, so I'm long on Tesla. I think there might be a chance to buy some more, actually. I'm a Tesla bull. I know that Elon's new political party is not going to work or ever be founded. So I don't think, actually it has officially been founded, the America Party. It's been registered and lodged. I don't know what the process thereafter is and how it all goes, but I guess if you've got enough money and supporters, and if you don't have money, if you don't have supporters, if you've got enough money, you can do it. And Tesla shares have dropped again, but just back down to that support level, 100 period moving average. That's where we got in. We got in at the price that we're at right now. So I'm not going to be adding any more Tesla because we bought some at this price. on the last drop down there a couple of days ago. That was on Tuesday. Yeah, so on Tuesday, we bought some more Tesla, got another position from up there. And we're generally in, well, slightly negative on the second tranche. That one's slightly out of the money too. But yeah, I might even consider adding some more Tesla on this dip. We've got about half an hour to go before the market opens. I'll be watching Tesla. I'll also be watching ARC, K, NVIDIA for dips to buy into, and QBTS, which I spoke about earlier. Obviously, we've missed unless this does a 1, 2, 3. So we could see a sort of an Elliott wave, impulse move, retracement, and then the third wave, the C leg down to the top of the channel, and a gap close. That gap really should be closed. Why did we only get halfway through the gap and not close it? Very annoying. And it hardly ever happens. It always closes. When you're heading back down towards the gap already, and it's right there, and you go into the gap, and then it's not closed, and we bounce off halfway down, that's unusual and annoying. Yeah, so I'm long Tesla Paula at the current price. Thomas John, your question is, hi James, how many trades in a day is good, 5 or 10? What is over trading, as at times it destroys traders? Yeah, Thomas, that's an incredibly important point you've just raised. I don't have time to talk about it right now because I've got to, the hours just rolled and I've got to prepare for my trades and my private group. And I think we might have quite a busy day today. But this is a really important question. And there's no clear answer, Thomas, no clear answer at all. And it depends initially very greatly on what sort of trader you are. If you're a day trader, you may take 50 trades in a day. I know people at Trader TV Live who take hundreds of trades a day. It's a day trading show on Canadians on TV, on YouTube. They take hundreds of trades a day. I generally take, I would say, and my private group members can sort of put comments up in here. I haven't actually measured it, but I'd say around about 3 to 5 trades per day I take. But remember, I'm trading 32 or 38 different instruments. So I'm trading all of the commodities. I'm trading all of the currency pairs, all the majors at least. I'm trading all the stock market indices and many of the major tech names. And I'm trading metals, and I'm trading oil and natural. So I'm trading all sorts of things. And so if I take 5 trades a day, that's really only one every week per instrument at the most. So it's not a lot. But if you're day trading, you may take frequent trades. You could take 100 or 200 trades in a day. But over trading is not about how many trades you take. It's about taking the wrong trades at the wrong time. And you could take 100 trades a day and be a great trader, or you could take 1 trade a week and be a great trader. That's got nothing to do with it. Remember, you pay costs every time you trade. You may pay commissions or you may pay spreads. So trading is expensive as well. And you've got to sort of evaluate whether if you trade 100 times a day and pay all those spreads and commissions and make a profit nevertheless, fine. If that's what you like doing, that's okay. But you may only trade once a day and achieve the same result and have much less stress, have much more free time, and enjoy your life to a much greater extent. So there's no real answer to it, but overtrading essentially means not too many trades. It means the wrong trades. It means revenge trading. It means getting in out of impatience at the wrong time, the wrong markets, the wrong analysis, just basically bullshit trades. You know what I'm talking about. I know what I'm talking about. Everyone else does. So just don't do it. Just don't do it. And learn to take the best trades. And if you're ever in any doubt at all about a trade, don't take it. It's really simple. And if you feel incredibly confident about a trade and you've done all the work and all the homework and you think it's excellent, go for it, but only go in with half your position or a quarter of your position. And if it works out, add some more. If it doesn't work out, stop it, hedge it, do whatever you want, but don't risk, go in at 10 to 1 leverage on the euro against the dollar because you think it's going up at a particular time of the day. It's the European Open. I think the euro is going up, going in at 10 to 1 leverage. You wipe out your account. It happens all the time, literally all the time. So the key point about this is not about how many trades you take. It's about what trades you take. And I think I've never suffered from revenge trading, but many people do. And I don't quite understand revenge trading because it doesn't really make sense to me. You've got an account, you lost a trade. Why would you want to recover that lost trade when there might be something better or something alternative, or just a very bad idea to get back into the same trade or the same market, whatever it might be. So it's about bad trades, not too many trades. Tanil. Hello, everyone. Nice to see you, Tanil. You're late. You're often late, Tanil, I have to say. But that's okay, because you can watch later on. No problem. Thanks for the updates, you say. Fariba, nice to see you as well. Just wondering how long it takes for you to double your account. Well, that's a very similar question to the previous one, Fariba, because if your goal is to double your trading account, you may have the wrong goal for a start. In fact, I would say you do have the wrong goal. Your first goal should be to survive and not lose your account. The second goal you should try to make, and I'll give you a conservative number, but I think it's a reasonable and realistic number. You should aim, if you're trading really well and you're confident, your tail's up, you're skilled, you're learned, you've trained, you've got everything, you're on your game, you should be aiming for about 5 to 10% a month. And that's exceptionally good. Exceptionally good, and you'll require leverage to achieve that. But retail trading is not the same as institutional trading, where we don't use leverage, where we don't YOLO and FOMO, where we have risk control mechanisms which are legislated by the company, and you just have to trade within those structures and rules. And so we're not aiming for, I've traded for banks and hedge funds, we're not aiming for to double the account, or for 5. You could double the account at 5% per month, actually about 7. You could double your account in a year, compounding. That's assuming you take nothing out and you add nothing in. A better way to do it is to aim for 5% per month and try and add money into your account. Don't take it out. Compounding is far more powerful than your own trading strategy itself. Your money will be much more valuable through the efforts of science, mathematics, and compounding than it will be through your own efforts in trading. And so if you start taking money out of your trading account and spending it, your account will grow much slower. If you make 5 to 7% per month and compound it, you can double your account every year. But that shouldn't be your goal. Your goal should be to survive, to get good at trading, and to aim for 1% per month, then 2, then 3, then 4, and 5, and so on, and compound that so that you can double your account every year. If you can double your account every year, within, and you're not going to be able to because your account will get too big to do that, but theoretically, within 5 years, a $1,000 account will be 2,000, 4,000, 8,000, 16,000, 32,000. Okay, from a $1,000 account at 5% per month, compounded, trading carefully, slowly. And once you get to $32,000, you start to have more options with your trading. You can start to look at more instruments. You can start to trade slightly differently. You can start to be more cautious. You can start to really work with the amount of money that you've built up and start to develop a trading future and career and path forward for you, if that's what you desire. Other people don't desire that. They just want to gamble and try and make a quick buck, and that's okay. I don't mind that. If you want to have a flutter, people gamble all the time. People gamble with, their life's a gamble. So if you like to gamble with money, that's not my business, and that's fine. But if you want to grow your account, don't aim for doubling it. Just aim for 5% a month, compounded, and even 2 or 3% is exceptionally good. Fariba, you say you can't start until September. Can you hold me a slot? I have children issues. Sure, Fariba. No problem. I'll definitely hold you a spot. Jamie says, thank you. Thank you, Jamie. Back to you. McCoysney, greetings from Croatia. Fantastic. And Thomas John, 3 to 5 the best. Cool. Don't know what you're talking about there, Thomas, but it seemed like a good response. And then Jamie Bridges, can you please have a look at the hour for NatGas and explain your thoughts? Okay, Jamie, I think I've covered natural gas in quite a lot of detail, so I don't think I'm going to do that again. And I've run out of time. I've got to get to the markets now. I'm actually a trader. That's what I do for a living, unlike many. And so I've got to be ready when the markets are open so that I can start moving my positions, deciding what to do. So let's have a look at what's going on. I'm looking to add to my short euro yen and pound yen positions at the 78.6% fib. I'm long on the Aussie dollar, nothing on anything else. Looking to buy euro and pound on 200 pip dips. I have no clue what the NASDAQ and the S&P are going to do next, but I'm long on the NASDAQ. Got nothing on the S&P really. And on the German 30, I'm looking to sell into rallies up to the top of the channel again. So a mixed bag really on stocks. Don't get too gung-ho one way or the other. The stock markets could go up like this. I'm showing you here. We could see 25,000 here. We could see 25,000 on the NASDAQ before these pull back. But we could also equally as well pull back very dramatically, very sharply. And we could do that on the German 32. Look for a spike up through the top of the channel, bit of a fake out, and then a collapse back down to the channel center line. After that, I don't know what's going to happen next. So that's where we are on stocks. We have looking to, I told you about QBTS, how we missed the long on that. And then on gold, I'm long on gold, long on silver. May have to hedge those, but I'll be looking to add to gold at 31.20, 3120, a new long tranche on gold if and when we get there. But I'm already long on gold. I'm long on silver. I'm long on copper. And I'm long on all three of these cryptos, Bitcoin, Ethereum, and XRP. Natural gas, we're looking to get long. And this is heading up quite nicely, folks. You can see on the continuous price, we've broken up through the 20-period moving average and back just into that order block. It's very crucial to wait for the 4-hour candle to complete. You'll notice that this 4-hour candle will complete in 1 hour's time from now, as will this one, which is also broken up through the 20-period moving average. This is the futures price. But I pointed this out to you earlier. We've got all sorts of traffic up above us, not only this gap, close on Friday, 20-period moving average, one channel line, another channel line, big order block that we're in the center of. So it's not all clear at all for natural gas. Be very, very careful. I'm going to wait for close above that messy zone above us on the futures to get an additional position to my long. So I'm already long from the current price, more or less, and I'll be looking to add some more to that on a close above that 20 and the 2 channel lines. And folks, I think that's it. I hope you had a wonderful time like I did. And if you haven't subscribed and joined and done all the things, click anything you can find below the video. There are lots of buttons there to click and press and enjoy. So click the join, press the subscribe, smash the like, and hit the join for my private group, which is down below in the description. Have a wonderful trading day, folks. I'll see you in the next video, which will be tomorrow, same time, same place. Take care.